Good afternoon, everybody. Happy Friday. This is Justin with Markets for Millennials. This is the weekly recap of the week of August 9th through the 13th. And a lot of things going on today. The markets are essentially moving up. We'll take a look at the dollar. We'll look at the yields on the 10-year, and we'll look across the equity markets, gold, silver, and Bitcoin. And look at what's happened in the week that's passed, and we'll look ahead to the next week to see what we're expecting to happen. So starting here on the DXY, it's important, again, to remind you at all times that the DXY is the dollar relative to other fiat currencies, 50% of it being the euro and about 20% of it being the Japanese yen. And so it's important to remember that the dollar could go to the upside, but it doesn't mean that its purchasing power is increasing, right? And the long-term story of the dollar, as you see here on the chart, is that it has been in a long-term downtrend. But for the last year, it's been essentially sideways. Small moves to the downside, to the upside, to the downside, to the upside. Well, we've been tracking for a while now this ascending channel with these cloned trend lines off this blue prime trend line. This is the near-term momentum and the near-term price action. And what you actually see here is that price had been respecting the first line and then the second line right here. We actually came down and tested the second line, bounced up. But what we are running into here is this confluence of a descending channel, which is from this kind of sideways triangle pattern, which I established through this trend line, which I added a little while ago, and then this downside channel. So we're sideways between this range bound. But then also we are still failing to get above our near-term high, which was on March 30th in that area. And we still have not really made a higher high since then. We've kind of have this, what looks kind of like it's forming a double top, a very small double top. I don't even like saying that because I think you could probably on any time frame find those anywhere and try to say it's a double top. But anyway, what I can say is price wicked to around the same level, and it has not been able to close above this trend line or above this horizontal resistance level. In fact, today we've seen a huge sell down in the dollar, 0.5%. That's a good sized move for the dollar to the downside. So we've kind of fallen below this trend line, and now what we're going to be looking for in the week ahead is to see if this trend line holds or if this trend line holds. That's what I will be looking for to the upside, to the downside. And I will also be looking to see if maybe was this a blip, or is the dollar going to come up and retest and bust through? I suspect no, because we're over the next few days into next week going to get, again, we've got like 3 resistance lines that are in this vicinity. Obviously the horizontal resistance is a little bit above, but there's this confluence here. So the resistance will be stronger. And I think what that also means is that if it did break through and close above, that's a much stronger indication that the dollar is going to continue to the upside. But to me, the dollar has not proven itself yet. Okay, so I actually do believe that over the next week we are going to come down and test this line. And it's only really, it was tested a little on the upside, but it was only tested over the course of 1 week on the downside. So to me, it doesn't seem as strong as this range right here, the range between these two lines. So I'm actually expecting it to break that and to test the prime trend line, and we'll see what happens. Obviously, nothing is certain, but we'll definitely see what happens. And so with the dollar kind of coming down, again, relative to other currencies, where I think you saw that make the biggest difference was on gold and silver. So I talked recently on my commodity video earlier this week, and I talked about it last week. We had this huge sell down. We had a flash crash Sunday night, but it recovered quite a bit. And then basically a doji day earlier this week. And then we've had 3 straight green days, although the second of those 3 was fairly muted. Today's move was pretty extensive, 1.5%. But to me, this isn't really anything yet, because we have to break above this 1795 level, basically around 1800. I think that's the level to breach. The reason why is because it was the level we tested on this little bounce here in June 23rd, and it was support. We stayed in this channel over the course of a few weeks before breaking down. And I'm definitely looking for us to try to get above this descending yellow trend line right there. That's going to be the first sign of repair. You'll also notice this is very similar to the dollar. There's a confluence of trend lines. I would say the same thing about this area on gold as well. But who knows? I do want to point out again that this trend line, which actually goes back, it's a clone trend line that goes back to 2015, 2016, 2017. It's worked at a lot of different levels. It's currently being respected. It's been respected on 3 occasions now. So I think that that's something to pay attention to. I think, at least on the downside, this trend line will continue to be good support. I'm really looking for gold to prove itself above 1800, and even better if it could get above 1917, somewhere in this area. That would be the best case scenario. Obviously, it's going to take some time for gold to repair itself. And the same thing is true on silver. Silver, we broke back into this little range where we bounced around as support a little bit in previous months. It's been a long time since we've been in this range. The last time we wicked in or closed in this range was March 30th. So to me, silver's not looking as good. Let me go down and look at my gold silver ratio. We're still above this level. We broke through it. We broke through it and made it support. And I've talked a lot about this. If gold is outperforming silver, that's not good for the precious metals overall, because you want to see silver outperforming if you're in a precious metals bull market. So anyway, I'm not really interested in gold and silver at this exact moment, and the reason why, just look at the chart. I mean, tell me how much of this has been predictable. If you think about what we've been seeing, in this, just across this consolidation, right, where the macro backdrop and the narrative was inflation, 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 and yet gold was underperforming and losing value over time. And it's still, it's crazy to think that from a year ago, if we go to August, we're still under where we were a year ago. That's just insane. So gold is negative year over year in August. And I'm just not interested. Gold hasn't proven itself. And who could have predicted any of this price action? Who would have predicted the bounce here? Who would have predicted the rocket up, or the sell down here, or the sell down here? Who would have known? I don't think anybody could have imagined it. So I'm not interested in this until we get some confirmation above some higher levels. All right. So over the next week, I'm looking on both gold and silver to see if they can get up above this overhead resistance. For gold at about 1800, and for silver, I would actually like to see silver get back above 25 at least before I start kind of thinking that some of that repair has happened on gold and silver. Let's take a look at the equity indices. We have the S&P continuing to make all-time highs. This is, as I look at this, it looks bullish as can be. Yet at the same time, I'm also slightly nervous about this, because if you actually look at what price is doing. You can see that price, kind of goes up and curls, curls, and curls, and curls, and curls. And then if you actually look at what's going on here, this actually looks like it's starting to go parabolic. And so I'm wondering if we're going to hit this overhead resistance right here and then bounce down pretty harshly. If you actually space this out, you get these occasional sell downs that are pretty, either over a couple of days or maybe 3 days or 1 day. You get a kind of a harsh red day. Obviously, when I say harsh, look, 1.56%, 1.39%, 2.1%. They're red days, but it's not even close to what they could be. But I am a little, to be honest with you, I'm a little concerned, if price is going to come up above, like if it's going to move in this sort of parabolic arc, right, like that, if it's going to get stopped by this resistance line or if it's going to bust through. Really interested over the next week to see what happens with that. If we look at the Dow also up. The Dow also had some pretty pronounced moves up, but was actually red. It was up, red candle, because it closed lower than it opened, but definitely higher than yesterday, but not by much, very minimal. And so when I look at the Dow, to me it looks better from the standpoint of it's not having these outrageous moves to the upside, and a lot of its moves to the upside are getting checked within reason. The NASDAQ. So this is interesting to me because I was looking at this on my daily chart. I recolored this line and moved it slightly because I wanted to get a better view. We did sell down, break down, and then we've retested. If you look at my daily chart here, you can actually see our wick. We wick into this line, but we closed below it on the futures. But what's really interesting is if you look at the 8-hour chart, it actually shows this as being above the trend line. So I don't know if that's a glitch. I don't really know what's going on there. But to me, this looks like on daily, this looks like a breakdown and a retest. And so what I'm looking for on Sunday evening, Monday morning, and then Tuesday is to see if we resume down and have some good follow through on the downside, or if we end up coming up back into the wedge that's getting a lot smaller. If you really think about it, this is the perfect place to break down because or to break up, that could happen too, because we're getting to the end of this little consolidation. It's something has got to give. It's got to go somewhere. And my personal view is I think it's going to go to the downside. Let's take a look at the Russell. And I've been talking about this a lot. I feel like I'm a broken record continuing to say this, but we have not made a new all-time high since March 15th. And we're trading at the same level that we got to on February 5th. And I've talked about how we toyed with this trend line, this ascending trend line, which actually comes back from the March lows of last year, of 2020. We've come below it. We closed at it, come below it, popped above it, closed at it, popped above, closed below it, popped above it. So what I'm looking here is, will the Russell retest and resume down? Or will we get another candle like this green candle or like this green candle that just shoots right back up into it? Whoops, didn't mean to do that. Sorry about that. So that's what I'm going to be looking for on the Russell. So this is definitely something of interest. I've talked about how concerning it is to me that the Russell is not moving with the other indexes or indices, because to me, the Russell is a lot greater picture, a much better picture about the actual overall economy, whereas the S&P and the NASDAQ are so heavily weighted to the tech sector, and the Dow is only 30 stocks. Even though I think it's equally weighted, I believe, it's only 30 stocks, so it's not the greatest picture of the overall market, but the Russell is, and the Russell is sideways. And this gives some credence to maybe the idea that the economy is not actually doing as well overall as maybe some of those in Washington would have you believe. So that's something I want to continue to look for. Let's take a look at yields. This makes sense with the NASDAQ going up, and also with gold and silver and Bitcoin moving up. Look at the move on yields. Right, so this was almost a 6% drop, and here we are closing at 128.2, and so that's kind of a big deal. So we got rejected from this descending trend line. That happened right here as well after we broke down the first time. So we've come up and retested it again and got rejected. And now what I'm going to be looking for over the next week into next week is to see, are we going to get a retest and rejection and resumption down to the downside just like we did here in late July? Or are we going to bounce around in here? Or are we going to go up again for another test? No one really knows. I don't know. But I do think, oops, did not mean to do that. But that is what I am going to be looking for. It's really interesting. I drew this in a previous video this week, thinking that I was like, because I wanted to know what was going to happen. I did not anticipate that it was going to be that quick to get rejected and to come down below this next trend line, but that's what happened. Okay, so that to me makes sense why not only the NASDAQ has had a good day. I mean, it's actually really interesting with yields coming down the way they did, the NASDAQ only being up 0.31%. It's kind of surprising. But where it's not surprising is, again, if you connect that to the moves on gold and silver, and then also Bitcoin, which we'll talk about again in just a second. So this is giving credence to the narrative of a near-term kind of deflationary, like mini cycle. I personally think in the long term we are going to get the yields to go back up. I do think inevitably when yields do go back up, we're either going to hit an important resistance level like we did right here. Let me darken this up. We hit that level and bounce down. And I just, to remind everybody where that level comes from, if you go on a week-long chart, I don't know why this line looks like that. That's very strange. Sorry about that. These channels, like look how long this channel has existed, since the 80s, right? Some good lines right there. And so point being, I think at some point we would hit the resistance level, some resistance level, and either come down, or the Fed will be forced to do QE to bring yields back down. I do think inflation is going to happen in the long term. Obviously, your prices are going to continue to go up regardless of what happens on yields. But I do think it's possible that for the next couple of months, we could see yields come down. And I think the level that I'll be watching will be right here at about the 0.95 or the one spot level. I think that's going to be a level to watch. So maybe what I'll do is I'll put a line right about there, and I'm going to make it really dark because it's not exact, but that seems like a good level. Obviously, it was resistance, and then support. And so that's, to me, a pretty big deal. And then also to just remind you that it's not only bouncing off of this descending trend line from my old bull flag, but also at the same time off the confluence of that line plus this ascending trend line, which comes from the yields bottom in August of 2020. And so that doesn't look good for yields. So what will be the tell is, are we going to make a higher low or are we going to make a lower low? So I'll be looking at that. And then finally, what's the story on Bitcoin? Bitcoin's looking pretty good. I've been saying daily ever since we've been on the way up from the low. There's nothing to worry about. If you're hodling, there's nothing to worry about. If you're trading, please be careful with and manage your risk properly. Be careful about buying. When you have these days in a row of run-ups, or if you have price moving really big, really fast, expect a pullback. Expect something to cause price to pull back. Okay, so you definitely don't want to be buying on, chasing the momentum to the upside. So the best thing I could tell you to do here, and obviously not financial advice, so I took this trend line, the most important trend line in crypto, and I've cloned it, and I'm going to keep cloning it so that I can find potential support and resistance, because you can see here that, and I might have pointed this out previously, but you can see it works right there, right? And you can see, you can see it works there. The market respected it. It's even better if you look at the 8-hour. The 8-hour chart, it looks really good here. You see it was resistance, popped above it, support, boom. Okay, so that's what I use the smaller time frames for. You should, by the way, on Bitcoin, you should not, unless you're an expert, you should not be day trading Bitcoin. I would even, this is my personal opinion, I would even caution about swing trading Bitcoin. It's very difficult. Who would have predicted any of what just happened over here? Nobody could have, and if anybody said that they predicted it, they're lying. Okay, but it's just so difficult, right? But this will help you if you do this with the trend lines. It will help you to find potential support levels to watch. Okay, so like if price has trouble breaking above a level, that's why on the 8-hour it works really well. If you see here, price had trouble breaking above this level, right? So then as soon as we bounced above it, and then we retested it here, I put that line there, right? Because I wanted to see if that level was going to hold. So literally I stuck that line right there. It actually connects these two bullish wicks on the downside, and you could see the market respected it. Right? That's how the markets work. They have a lot of symmetry, right? So you can actually see, to the upside now. Let me get rid of that a little bit. We've been in this channel, right? See, the top side has been really good support and then resistance. And so what I'll be looking for over the next few days is I'm wondering if price will have enough strength movement this weekend to pop above the top side of this channel, retest it, and then get above this horizontal resistance. I think that this horizontal resistance level at 51,326 is a pretty important level. It's the closing low from March 25th. I think that's an important level to watch. So I'm wondering if, so I would say that maybe what I think is going to happen is we're either going to pop above this, consolidate a few days underneath, and then jump above that, or we may stay in this channel, and then when we get to this resistance line, come above it and retest it and resume, or consolidate underneath it for a period of time before shooting back up. So time will tell. That's why you have to manage your risk. Some people have been asking me on Twitter and on Discord what levels that I'm looking at, because people, once again, look at this. I mean, come on. You had 3 daily red candles, and people are freaking out. And look at, we're already again higher. We've made higher highs than these candles. So people have been asking, what are the levels that I'm looking at? Well, now that we've cleared easily this 45,240 level, I'm looking for this as my first level. And then my level where I'm starting to say, hey, something is wrong, that shouldn't happen, is this level at 39, basically 39,000. 3913 is the exact line. That's where I'm going to be very concerned. And you'll notice too, like what's happening here is, that line is coinciding with right now the ascending lower end of this trend line, and so that's what I'm paying attention to. But unless price breaks down to that level or even close to it, I'm not concerned at all. I think that within a month we are going to be at or above or at new all-time highs or at our previous all-time high. And so that's my look at the markets. Thank you for watching. Please like and subscribe and share if you thought this video was helpful. And I'll see you guys the next time on Markets for Millennials. Have a great day and a great weekend.